Hi guys, hope everyone is having a really good start to the weekend. As I record this intro just from my hotel in London, I'm down in London for the weekend. Lots going on down here at the moment. Having lots and lots of fun. It's well earned, and yeah, I have lots of questions, messages, emails, just the usual stuff that I've obviously had this week. A lot of you again wondering what's happening with the market. Obviously, it has been a good week. The major indices have advanced, but I know a lot of you want to know what the technicals are really telling us, and I know that most of you really just want to see what the individual charts for some of the stocks look like. Hopefully, some of you picked up some of the free charts that I put out to social media in the last week or so. I'm talking about HIIQ and EHTH. I posted charts for them, and they've both done very well. The HIIQ is a stock that I'm going to be talking about today as well. That's been a complete game changer for many of our clients in the last 10 days. But, naturally, I hope you all enjoy the analysis. I hope you get something from it. And as always, if you are somebody that struggles and maybe you'd like to maybe to join our premium group, etc., pick up technical analysis, learn technical analysis, there will be, as usual, options for you at the end. But yeah, let's dive into the charts, guys. So, as always, guys, let's just start off with the quick disclaimer. Just make sure that you understand that it's not investment advice. The interpretation of the information is solely up to you, and I assume no responsibility or liability for any losses that you may incur by following this analysis. Maybe just to give myself a little bit of credibility, I think most of you already know this, but I'm registered with the CMT Association, working my way towards my chartered status at the moment. And I think, again, this week, there's a lot of you that reach out to me via all my platforms, and I know there's a lot of you that feel like you're on a bit of a roller coaster, maybe with technical analysis, maybe with positions, etc. If you are in that camp and you're on a bit of a roller coaster, feel free to stick around for a minute at the end, but please do subscribe to our channel, give it a thumbs up. It all helps with the YouTube algorithms if you do pick up even the slightest little thing from this. And I'll also walk you through our offer that we're doing at the moment. And yeah, let's dive into the charts. So I think where I really want to start this week is to just kind of walk you through what's happening with the S&P 500 and some of the sectors that I think you need to be paying close attention to. Now, the S&P 500, we all know the market has been on a rocket ship over the last few months. It's been nearly impossible to lose money in the market. However, what we are seeing at the moment is, although we are breaking out into new highs, and obviously, again, I'm hoping that most of you are enjoying the ride at the moment. I think the message that I have at the moment, especially with our clients and subscribers, etc., is that we do need to be a little bit cautious. We do have divergence in momentum. Now, we also have participation from areas of the market, and when we look at the participation, we need to see the strength of that participation. And what we're seeing at the moment is with the S&P 500, the percentage of stocks, although we are making new highs in the market, the percentage of stocks that are now trading above their 50 period simple moving average is actually on the decline. So again, that's something, although it's not a standalone tool to say, let's start hedging against the market, etc. I think what we just need to be aware of is that, yes, we're still bullish on the market. We've got a long-term structural uptrend, but again, the theme of the last few weeks is just manage risk a little bit closer. I think most of the technical community is expecting some kind of pullback or a corrective phase. Nobody has any clue what that corrective phase will look like. You'll have the gurus on
CNBC, Bloomberg saying that we're going to get a 20% drop, 10% drop. Don't listen to a word they say, because nobody knows. That is the default answer with any good technical analyst. So that's what the S&P 500 looks like at the moment. We also have utilities starting to advance. We have XLC, which is obviously looking to break out here. I think what we also have to be mindful of is obviously potential divergence kicking, and obviously tech is another example of that. So those are some of the major indices that obviously we're currently dealing with. Individual charts. Now, I'm hoping that most of you picked up my chart on this. I posted it out to social media, and that this has had an incredible move. A lot of you won't know this, but our subscribers and clients received a chart on this stock way down here. One of our clients has actually been in way down here, and it's obviously off and running. Now, the reason why this is such an appealing stock, yes, we're obviously breaking out, but it also has 75% short interest. Now, what that really says to us is, yes, there's a lot of individuals that are bearish on the stock. However, once a stock starts to reverse, we also have quite a high probability of what's called a short squeeze, and that is really what we're focusing on with this chart. Yes, it's breaking out, standard breakout. We can all call breakouts, but it's the strength and the momentum that we want to see come in and get behind it. If you look at Tesla recently, that's a fine example of what a short squeeze looks like. And although I'm not saying that this is going to do a Tesla, you know, we do like short squeezes at honeystocks.com, so you know, definitely keep an eye on that stock. CDNS, it has broken out. Our clients and subscribers again got a chart on this earlier in the week. It obviously broken out, and it's off and running, so we do have a breakout there with CDNS. Now, what you also do need to be mindful of is earnings season, guys. You need to have very clear rules in place in order to navigate earnings season. I'm not one of these guys that is just holding blindly and buying stocks in the minutes leading up to earnings. You're essentially playing Vegas odds at that point if that's what you're doing. You know, if your risk appetite allows it, you know, by all means buy some lotto calls or puts. But I think for longevity in this game, you do need to have very clear structure and rules in place around earnings season. So with EHTH, although this is another chart that I posted free to social media a couple of weeks ago, it's obviously off and running. I think the message would be, if you are one of those that, you know, did take this trade, or you taken a position, start to think about the 20th of February, because it's obviously quite important. We've got Southwest Airlines is obviously close to looking like it's wanting to break out. A little bit of a decline there on Friday. I think, you know, common sense should hopefully tell you that with the airlines, obviously a big area that you need to be, I suppose, aware of would be the energy oil market. It's obviously a massive expense for the airlines. So it's not any surprise to me that as the oil price has been going down over the last couple of months, that airline stocks have been rising. So I would actually keep an eye on energy prices, and you know, if we get the breakout in Southwest Airlines, you'll probably find that the oil has broken key support levels. So you know, absolutely keep an eye on Southwest Airlines for a potential breakout there. Netflix, highlighted this one the last 2 weeks, but the breakout here, it's obviously moving. So you know, if Netflix isn't on your radar, it probably should be. It's around 380 at the moment. I would fully expect this to go and test these highs around 420. Amazon had a little bit of a dip this week. Now, I think there's a couple of you that have reached out, freaking out a little bit, asking why it's moved down. Please, guys, understand that it's perfectly reasonable behaviour for price to take a little bit of a pause in an otherwise clear structural uptrend once it's had a move like that. So it's just chopping about sideways and down at the moment. So be mindful of it. We do have obviously potential resistance in the not too distant future, but ultimately, it's Amazon. If the market is going to continue higher, and I've used these words many times over the last few months with regards to Amazon, it's very difficult to imagine an advancing market where Amazon doesn't participate. So absolutely, Amazon, absolutely bullish on the stock at the moment. It might pull back a little bit here, but long-term structural uptrend, guys. Starbucks, for those of you that perhaps did not buy in down here, I think you do need to be mindful of the triangle pattern, potential resistance. It may chop about sideways, but ultimately, I think any new money momentum to come in, I think you're probably looking at this breakout level here, which I think should probably come in around $93, $94. So it might well be worth just setting a price alert and revisiting that stock once you get the breakout. Now, Apple, I don't know what else I can say about Apple. It's obviously on a massive structural uptrend at the moment. Ultimately, I think once we start to advance through these key levels, logic tells us it starts to move towards the next level. So if you're out there and you're in Apple, I do see a very clear upside objective of around 380. But again, I think a lot of it's going to come down to the market. We're obviously seeing the divergences in a lot of the major indices, the individual sectors, etc. So I think, just manage your positions in a systematic manner. I think that's the way to kind of do this. Yes, we've obviously got our long-term goals as well at honeystocks.com, but I think it also pays to just understand how to manage and when to be a little bit more risk focused in the approach. And I think at the moment, being 100% aware of your risk and obviously managing risk is the way to kind of go about things at the moment. Octa, very close to looking to break out above 140 here. I think the chart's very clear with that one, guys. It's not a difficult chart for me to build. We obviously have a breakout this week in a few of these software cloud-based tech names. Twilio looks like it wants to go and test this level around 134, 135 as well. So I think if we get a breakout there, I think Twilio probably goes on to test 150. Universal Display Corp is an interesting one at the moment. I think when you start to add in a couple of the technical tools, it's very clear, at least to me, that there's some stocks where you can find risk to reward propositions in most stocks if you play about with the numbers enough. But I think it also pays to understand where the blind spots are on a chart and where you might get some aggressive selling, etc. And for me, I think that level in OLED is below this level here. I think that is where you might see some selling take place. You can still be bullish above this level, but I think a drop below that, I'd be less bullish. And I think for those of you that are out there in OLED, I'm not saying it's a bad company. If it breaks support levels, it doesn't turn it into a bad company. But I don't like the mental hurdles of having to hold a stock for 12 months hoping that it will resume on its merry way. So that this is what technical analysis does. It just allows us to kind of get defensive early so that you're not bag holding for 6 months, 2 years, 3 years, whatever it might be. So yeah, bullish above this level, below it not so much. Twitter has been very good to a lot of our subscribers over the last couple of months. I think this big huge move on the back of earnings obviously helped that. What we've had a breakout followed by a successful retest, and it looks like it's off and running. So if you're out there and you're in Twitter, I think the 200 period simple moving average is a level that I'd be keeping a very close eye on. And again, very, very simple for me. I would just remain bullish above that level. Roku, obviously gap up overnight on the back of earnings. We've had a huge decline. So this is actually a chart that is actually quite difficult from a technical perspective to identify an optimal entry, especially when we start to use, incredibly subjective tools like trend lines. However, this seems to be a level of interest for this stock. So it'll be interesting to see if this level holds, whether we get a bounce to the upside or whether we go back and we test this lower end of support. But yeah, very, very difficult chart. I get asked about Roku at least 10 times a week. That's my chart for it at the moment, but I do reserve the right to change that tomorrow, or I should say Tuesday, when the market is back open. We've also got ABV. Again, our client's got a chart on this in anticipation of this breakout. Obviously, the breakout started to advance. Again, perfectly reasonable behavior for price. It's advanced, it's pulled back a little bit. Ultimately, we do want to see these upside objectives met, and for me, I think 125 is that upside objective. We recently hit our upside objective with Lennar Corp. This was the breakout level highlighted, absolute textbook. So I think that's really what an ideal swing trade, I suppose, looks like. But yeah, I think what you simply say at that point, guys, is thank you very much, Mr. Lennar. Let's revisit you another day. We're only ever dating stocks, we're never marrying them. And I think once you have a clear plan for your position, and once your target is met, you stick to your plan. If you get another breakout, you can always buy back in again. But that's certainly how I see it at the moment with Lennar Corp. Again, Nvidia is another perfect example of this. I must have had about 20 messages on this week. Obviously, huge move. And again, upside objective met around 290. Will it break out? Will it move above $300? Probably would be the answer. But it wouldn't surprise me in the slightest if we start to see a little bit of consolidation before it taking the next leg higher. And I think if we do get that consolidation period, it's normal for it to take a month or two. You want to have your money, constantly working for you. That's obviously what trading versus investing does. It's not that you need to day trade. I'm not a day trader. I couldn't think of anything worse. But you can use technical analysis to your advantage and just to aid, consistent decision making, and to have a plan and a structure really puts things at ease for most of our clients and subscribers. Obviously, the market can be challenging mentally sometimes, especially if you're not used to moves. But just adding that structure and having that discipline, etc., really does help in many ways. JD.com, somebody was asking about this. Again, this is how I really see the chart. Very similar to obviously Nvidia and Lennar. We're close to meeting our upside objective with JD.com, and then what it does from there, who knows? But I suspect that there's more to come from China. McDonald's is close to kind of breaking out. I think for me though, I would probably just be waiting on this one just to kind of break above this level up here around 220. So there's just a little bit further for it to go, for it to travel. And it's not a bearish signal when stocks are breaking out into new highs. There's many of you that will freak out and say, how can I buy when price is trading at its highest? I think what you have to bear in mind is that when stocks create highs, they go on to create new highs and newer highs. That's how trends work, guys. We want to be in these trends where we don't want to be in them for $1 or $2 moves. We want to be in them for $20, $50, $100 moves, because that's where the big money is made, especially when you consider things like options, etc. AYX, is breaking out. This is obviously a chart that I've been bullish on since we broke out here, inverse head and shoulders. Many of you know the chart well because I know lots of you taking that trade. Upside objective met. Thank you very much. It's taken a few weeks, but we've now got the breakout in AYX. So, let's see if this one has legs. But again, it's not a bearish signal that is breaking out. We have Salesforce. I think Salesforce represents at least a bit of consideration here. I think if we break out above this level, that might be an area where you might want to consider. Because the next Fibonacci level is way up at 237. So yeah, if CRM is a company that you like, I would just be keeping an eye on this level in case you do get an outright rejection at around 190, which is absolutely possible. But I don't know why it works, but these technical levels just work. I can't explain why. The market just respects them. We have Activision Blizzard, structural uptrend, not the fastest moving of stocks. I think one or two of our subscribers have long-standing positions in this. It has moved above the next Fibonacci level. It does seem to be a stock that represents consistency with these Fibonacci levels. So yeah, I think you can still be bullish on Activision Blizzard, and I think above that level is one that you might want to consider there. We've got GDS. Again, we've pushed up against the 161 extension of the June 2018 declines. So yeah, I'd just be keeping an eye on this level. I think any significant weakness can probably be bought. And I think any breakout above that level would probably be a catalyst for new momentum and new money to obviously come into the stock. So guys, I hope you've picked something up from that. I hope there's been some kind of value. I hope it's been worth 20 minutes of your time. I know that there's many of you out there that do struggle. I know what that looks like. I've obviously seen it up close. I know how difficult it is, guys. But if you are somebody out there that maybe wants to learn technical analysis, maybe you want to come in and be part of our premium charting and having access to our daily charts or trade ideas, etc., and you just want to kind of get a head start on, I suppose, the content that I put out to social media, which is generally delayed by a couple of days. But we are fast approaching our 200 membership limit. If you want to have access to all this and just having an incredible community of traders as well from all around the world that are there to provide support, charting, the charting that I'm seeing from a lot of our subscribers and members based upon obviously the tools that they've learned from honeystocks.com is exceptional as well. The community is no longer just about me. There are some incredible traders in the group, and by signing up at the moment, until these 200 members are hit, which we are very, very close, we are providing complete access to our full technical analysis program, which, as you know, most of you will know that we obviously charge a lot of money for. What I'd also say, guys, is that the community that I've built, the group, etc., it's not going to support you if you are day trading and you're moving in and out of stocks on minute time frames, etc. I think what sets my group apart is there's a very clear level of intelligence and intellect within the group, very professional people. And that's one of the reasons why I don't do monthly subscriptions, because monthly subscriptions actually attract the type of traders that I don't necessarily want to have within my group. So by having an annual membership, it attracts the right people, and that is a reflection on the quality of the group as well. So if you're somebody out there that is wanting to align with a consistent approach, and maybe you're not trading penny stocks, for example, and you have a bit of capital behind you, then we'd love to obviously welcome you. But I'm obviously studying my way towards my CMT designation. Most of you already know the website honeystocks.com. Please go check that out, because we publish all our trade ideas so that you can see the types of stocks that we recommend to our subscribers and clients. For the last 3 years, I'm very, very unique and transparent about what content I am posting to my groups. And you can go on and you can see exactly what I'm doing and how we're doing it. Obviously, ENPH has been absolutely massive over the last couple of months. But yeah, please go check that out. It's very, very interesting. And this is, this is what I'm talking about. We've got very clear, I suppose, parameters in place. Everything's very, very clear. I don't have any WhatsApp groups. I'm not asking you to move in on a trade alert in 10 minutes notice. I do tend to give at least 12 hours notice for any trade alert that we post. I've got a very professional setup with my app, with our email system, so there's very low chance of you ever missing any of the trade alerts. That's Starbucks. That's been another big winner recently. And a couple of charts that I've posted in the last week or two to our guys. We've obviously got ABV there, which, as you can see there, there's obviously a timestamp. But one of the things I did want to kind of highlight, and it just kind of goes to the community that I've built. So one of our subscribers posted this image to the group this week because he's currently recuperating in hospital, and he's doing fine at the moment, I think. But he posted this, and I thought this was really, really cool. That he's got the hospital, but he's also got the TV, the setup, and that's the reason why everybody was super happy for Dustin, because Dustin brought this stock to everybody's attention. It didn't show up on anybody's scans. It didn't show up on anybody's daily routines. But Dustin reached out to me and asked for the chart for it. I looked at the chart and obviously noticed short interest, and it was setting up beautifully for an entry. And this is the beauty of the group. And when we talk about how a group comes together, this is kind of what makes my group different, because everybody knows each other now on first name basis, and we're all invested in each other because we help each other every single day. And this chart has been massive for many of the guys that have traded options, and Dustin from his hospital bed has helped everybody make thousands and thousands of dollars. So yeah, if you want to come in and be part of that, guys, feel free to register your details below. There is a link on YouTube, so you can come through on that and just register your details if you'd like to kind of join. But as I said before, it's not going to support you if you are wanting to day trade. But if you are somebody that is maybe trying to fit trading around a career or a business, maybe you want to have better consistency, maybe you want to learn and not just follow, then I think we're probably a good place for you. But naturally, I'll leave it up to you guys, because I know what it's like to hunt around YouTube. Learning from losses, it's absolutely soul destroying, and I know that it doesn't have to be that way. So yeah, ask yourselves, guys, if you'd like to learn a new way, and if you do, please jump onto our website, just register your details and we'll take care of the rest. But from the bottom of my heart, thank you very much for watching, and maybe we will welcome you soon. Thanks again.